Hello students, today I am going to explain you sum number 11 of textual exercise. From the trial balance and adjustments of partnership firm of Salim and Shabana, prepare final accounts of partnership firm. Here, the profit and loss sharing ratio is not given in the first line. Even the same is not provided in the adjustment. That means partners will share the profit or loss in equal proportion, that is 1:1. Going with trial balance, capital accounts, along with that current accounts are given. So capital accounts are recorded on the liability side of the balance sheet directly. But if any permanent changes in the capital is given in the adjustment, then we need to prepare partners capital account. Current account. Now in current accounts, a small correction is there. Here the current account balance is interchange. So simply just considered the 10,000 debit balance is of Salim and 40,000 credit balance is of Shabana. So Shabana's current account, that is 40,000, it is recorded partner's current account credit side, and Salim's current account, that is debit balance, it is recorded debit side of partner's current account. Here one correction is there. By mistake the amount is interchange. That's why I told you the 40,000 rupees, that is the credit balance of current account of Shabana, and 10,000 is the debit balance of the current account of Salim. Stock of goods, the last date of the year, that means it is closing stock, balance sheet asset side. Cash balance, the amount is given in debit balance, the balance sheet asset side. Current account with bank, here the amount is given in the debit balance, that means current bank balance of the current account. It is recorded balance sheet asset side. But if the bank balance is given in the credit column, then it is considered as bank overdraft. Then after fixed deposit of State Bank of India, it is recorded balance sheet asset side. It is kind of investment. Now debtors and creditors. Debit balance indicate debtors, balance sheet asset side, and credit balance indicate creditors. It is recorded balance sheet liability side. Salary, profit and loss account debit side, as it is administrative expense. Now land and building, it is fixed asset, balance sheet asset side. Machinery, furniture, these two are also fixed assets, recorded balance sheet asset side. Insurance premium, administrative expense, so it is recorded profit and loss account debit side. Leasehold machinery, the lease period starts from 1st April 16. When the date is given, immediately check the closing date of trial balance. It is given 31st March 17. That means lease period starts from current year. So divide 60,000 by the 5 years. So we will get 12,000 rupees. So current year lease is rupees 12,000, which is to be written off. So profit and loss account debit to leasehold machinery account 12,000, which is the adjustment entry. One effect profit and loss account debit side, other effect minus from leasehold machinery. Stationery printing, administrative expense, recorded P&L account debit side. Now bad debt and bad debt reserve. These two are given, that means prepare the table of bad debt on the debit side of profit and loss account under the head other expense. Then after advertisement expense, selling and distribution expense, profit and loss account debit side. Traveling expense also selling and distribution expense, it is recorded profit and loss account debit side. Then after trading account, the amount is given in credit column, that means it is gross profit. Just now we have not moved with the adjustment. So on the basis of the given information, it is recorded profit and loss account credit side. Then after loan of Shabana from 1st October 16. It means Shabana has provided loan to the firm on the given date. Amount is given 60,000. Now in the adjustment, the information about rate of interest on loan is not given. So the interest payable at the rate 6% per annum. So 60,000, 6% for 6 months, it comes 1,800, which is financial expense. So interest on Shabana's loan account debit to outstanding interest on Shabana's loan. One effect profit and loss account debit side, other effect it is payable, so balance sheet liability side. And discount reserve, till now we have not gone through the adjustment, so the effect is only single effect minus from debtors. But when we will move with the adjustment, then the effect may get changed. Let me move with the adjustment. Salim withdrew goods of 4,000 for personal use, which is not recorded in books. So adjustment entry for the same is Salim's drawings account debit rupees 4,000 to purchase account. Now to purchase, that means the given account affects to trading account. So given gross profit is wrong, it is incorrect. That means we have to find revised gross profit. Then after Salim's drawings account debit 4,000, so it is recorded partner's current account debit side. Goods of rupees 8,000 purchased at the end of the accounting year, that is credit purchase, which is not recorded in the books. So entry for the credit purchase is purchase account debit to creditor's account. Again purchase account affects the trading account. That means we have to prepare revised trading account. On the debit side we have to record purchase. From that we have to minus withdrawal of the goods, and the net amount of rupees 4,000 goes in outer column. Second effect of the credit purchase, that is to creditors account plus in the creditors on balance sheet liability side. Then after prepaid insurance premium. So prepaid insurance premium, that means insurance premium paid in advance. Prepaid insurance premium account debit to insurance premium account. From debtors 800 is not recoverable and provide 5% bad debt reserve on debtors. So put the tick mark on debtors. Then after discount reserve on debtors is not required. Now while going through trial balance, we took the decision that minus from debtors, but here it is provided that discount reserve on debtors is not required. That means the created reserve is directly recorded to profit and loss account credit side. That's it, only single effect. And then after provide depreciation on machinery as well as furniture. Quickly move with the solution of the sum. Now we are first going with adjustment below the trial balance. There it is given Salim withdrew goods of rupees 4,000 for personal use. It is not recorded in the books. So for that adjustment entry is Salim's drawings account debit to purchase account. Salim's drawings account debit. Now the drawing is already account is closed and transferred to partner's current account. That's why we have to give the first debit effect on the partner's current account debit side. Before recording this, we need to record the amount of current account balance. So leave 2 lines of space and then record. Put that last date of the year, to drawings account, and the withdrawal is done by Salim. So in Salim's column record 4,000 rupees. To purchase account. So trading account debit side. Here the effect is being given by deducting the amount from the unrecorded purchase. So for recording this, we also need to record the effect of second adjustment. And second adjustment is goods of rupees 8,000 purchase at the end of the year, which is not recorded. So this purchase is the credit purchase. Purchase account debit. So purchase account debit, trading account debit side, that is revised trading account debit side. First record to unrecorded credit purchase. 8,000. From that minus goods withdrawn for personal use, that is the second effect of the previous adjustment 4,000. So net amount goes in outer column. After that, the second effect of the unrecorded purchase is plus in creditors. So balance sheet liability side, record the creditors 24,000. In that plus unrecorded credit purchase 8,000. So total amount 32,000 goes in outer column. After that, quickly first we complete the revised trading account. So here we need to record the gross profit, which is given in the trial balance 61,800 on credit side of revised trading account. Make the total, put the same total on opposite side, and from that minus the amount here in the debit column. So we get the revised gross profit 57,800, which we have to carry forward to profit and loss account credit side. Now we can also make the alternative calculation to find revised gross profit. So this is the tabular presentation. First record gross profit as per trial balance 61,800. From that minus net purchase. For that, first of all record unrecorded purchase 8,000. From that minus goods withdrawn for personal use 4,000. So net amount comes 4,000. Deduct it from 61,800. So we get 57,800, that is revised gross profit. Record it on profit and loss account, credit side, by trading account into bracket gross profit 57,800. Now we are going ahead with the prepaid insurance. Prepaid insurance account debit to insurance premium account 400. Prepaid insurance is recorded on asset side of the balance sheet. Here it is rupees 400. And the second effect, minus from insurance premium. Profit and loss account debit side to insurance premium 2000 is given in the trial balance. From that minus prepaid insurance 400, the amount goes in outer column 1600. Then next, from the debtors 800 is not recoverable and provide 5% bad debt reserve on debtors. So first half of the adjustment is the adjustment of bad debt. Bad debt account debit to debtors account, amount is 800. Bad debt account debit, it is recorded profit and loss account debit side. So for that we need to prepare the table. Bad debt trial balance, it is given 400. Bad debt adjustment is provided 800. Then after we need to prepare bad debt, we have to add bad debt reserve adjustment, and from that minus bad debt reserve trial balance rupees 2000. Second effect of bad debt adjustment, minus from debtors. So debtors 36,800, the value is given in trial balance. From that minus bad debt 800, so the amount left 36,000. On this amount we have to calculate bad debt reserve 5%. So 5% of 36,000, it comes 1800. So minus bad debt reserve from debtors, and the net amount goes in outer column 34,800. Adjustment entry for this bad debt reserve, because this reserve is created for next financial year, and this reserve, that is provision, is provided from profit and loss account. So the adjustment entry is profit and loss account debit to bad debt reserve. So one effect, minus from debtor, is done. The other effect, profit and loss account debit side, here it is. Make the total of these three amounts, it comes 3000. From that minus bad debt reserve of trial balance 2000, net amount 1000 goes in outer column. Moving with the next adjustment, discount reserve on debtors is not required. As it is not required, so it is recorded on credit side of profit and loss account by discount reserve on debtors 760. If this point is not given, then this carries single effect, and that is minus from debtors. But here in this sum it is given that discount reserve on debtor is not required. So the created reserve is cancelled and transferred to credit side of profit and loss account. Now the last adjustment below the trial balance is provide depreciation on machinery 20% and on furniture 5%. So balance sheet asset side, first of all record the value of machinery 40,000. On machinery depreciation is calculated 20%. The 20% of 40,000, it comes 8,000. One effect, minus from plant and machinery, because due to depreciation value of machinery gets reduced. That's why 32,000 goes in outer column. Debit effect of depreciation on machinery goes to profit and loss account debit side. Here the depreciation on plant and machine 8,000. Now on furniture the depreciation is calculated at 5%. So on furniture the value is given 10,000 minus depreciation at 5%. So 5% of 10,000, it comes 500. So net amount 9,500 goes in outer column. Now the debit effect of depreciation goes to profit and loss account debit side. Here it is depreciation on furniture 500. Now the adjustment below the trial balance is over. Now we are moving with the hidden adjustments. Now here in the trial balance the leasehold machinery is given. Besides the leasehold machinery, the point is given that from 1st April 16 for 5 years. That means leasehold machinery, the lease period starts from 1st April 16. And our current financial year is 1st April 16 to 31st March 17. The leasehold machinery is given 60,000. So whole year the leasehold machinery is utilized. That's why we need to find the current year written off value. So 60,000 is divided by 5, we will get 12,000. So leasehold machinery written off 12,000, the net amount goes in outer column, and this value is carried forward to the next financial years. Now the second effect of 12,000 is profit and loss account debit side. To leasehold machinery written off 12,000. With that the adjustment entry is profit and loss account debit to leasehold machine account. and that's why this is the debit effect and credit effect minus from leasehold building. Now loan of Shabana that we have to record on the liability side of the balance sheet. Loan is provided on 1st October 16. So interest on loan we have already calculated, it comes 1800. This is the financial expense, and that's why adjustment entry for interest on loan is interest on loan of Shabana account debit to outstanding interest on loan. As it is financial expense, so profit and loss account debit side, interest on loan of Shabana 1800. It is payable. So balance sheet, liability side, outstanding interest on loan of Shabana 1800. Now everything is done. Only the posting from the trial balance is left. So let me go with the posting from the trial balance. First of all, capital account. It is directly recorded on the balance sheet liability side, and the amount goes in outer column 1,60,000 and 1,20,000 respectively of Salim and Shabana. Current account. There the correction is there. I have explained you that what is the mistake over there. So Shabana has a credit balance. So on credit side of current account, 1st April 16. Okay, so Salim has 40,000 credit balance, so it is recorded over here, and Shabana has 10,000 debit balance, so it is recorded over here on debit side of partner's current account. After that, closing stock, it is recorded on balance sheet asset side. Cash balance, balance sheet asset side recorded. Current account with the bank, it has also debit balance, so it is recorded balance sheet asset side. Then fixed deposit of State Bank of India also recorded on balance sheet asset side. After that, debtors, the effect is already given. Creditors, that is also done. Now salary. Salary is administrative expense, so it is recorded profit and loss account debit side 37,000. Then next is land and building, which is fixed assets. It is recorded on the asset side of the balance sheet. Here it is, and the amount is 1,20,000. Then machinery is already recorded because the adjustment was there. Furniture is also done. Insurance premium also recorded because on that also the adjustment was there. Leisure machinery is done. Now stationery and printing administrative expense, it is recorded profit and loss account debit side. Bad debt and bad debt reserve, the effect is already done. Then after advertisement expense, it is also selling and distribution expense recorded profit and loss account debit side 1200. Traveling expense 800, it is recorded profit and loss account debit side. After that, trading account, we have already calculated the revised gross profit and it is recorded on credit side of profit and loss account. Then the effect of loan of Shabana as well as discount reserve, both are already done. Now we have to simply move with the total. After finding the revised gross profit, make the total of the credit side of the profit and loss account. If we go through the credit side of total, and then after if we go with the debit side total, and when you will make the comparison, total of debit side is more. So the total is 65,100. Put this total on the opposite side. From that minus the amount which are given in the credit on the credit side of profit and loss account. The difference comes 6,540. Now here the transaction between the partners and partnership firm are not there. That's why it is considered as net loss, as well as it is also considered as net divisible loss. No need to prepare the partner profit and loss appropriation account separately. So directly the effect is given to partner's current account. The loss is disbursed among the partner equally. So individual partner's share comes 3,270. Now due to loss, the balance gets reduced. Partner's current account balance gets reduced. So it is recorded partner's current account debit side. On debit side, here it is to profit and loss account, that is divisible loss 3,270 in the individual partners column. Now we have to move with the total of partners current account. First we are moving with the Salim, the column of Salim. Make the total 40,000 as it is. Put the same total on opposite side. From that minus 4,000 and 3,270. The difference comes on debit side 32,730. This shows the credit balance of Salim's current account, and this is recorded on balance sheet liability side. Here it is Salim's current account 32,730. Now moving with Shabana's column. 10,000. The debit side of Shabana's current account is more. Make the total 10,000 plus 3,270. It comes 13,270. Put the same amount on opposite side. In her column, no any particular amount are there. That's why the amount remain as it is. This the amount is recorded, that is the difference is not there, but still the amount is recorded on the credit side because the debit side total is more. So Shabana has debit balance of current account, and this is recorded on balance sheet asset side. Here it is Shabana's current account 13,270. Now make the total of balance sheet. Both the side total comes 4,06,530. This is what about the sum. Again, go through the same sum, solve it. Thank you.